Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. Now for those of you who are new to the Greedy Trader channel, here is where we talk about all things market profile, and of course you can have a genuine conversation about trading and investing. Something that is in very short supply these days on the internet. So I'm really ecstatic that I could be sitting here with you guys talking to you about all this stuff that I can guarantee you're not going to hear anything else about it. In fact, you're not going to hear it anywhere else. You're not going to hear anything else about it beyond this video. So if you're already here and you're here for the first time, stick around. Alright, so for those of you guys who've been with me for a long time and followed my videos, then this is just another video. Alright, so today we're going to talk about, because for those of you who don't know, I run a free Discord server. I have a free mentorship program right here on my YouTube channel. So if you haven't seen that yet, check it out. And for those guys who follow me on the Discord, I had a few questions in terms of, I think someone asked about whether we're going into another liquidity grab. Well, whilst I don't like to just think about the concept of liquidity in terms of just grabbing the liquidity, what we want to understand is the context around why liquidity has built up in a specific area and within a specific price zone. So in this video, we're going to talk a lot about what's happened, what I said. Again, for those of you who saw my previous video, and if you haven't seen that, check it out. I did say, right, that we were going to go down on cable, so we're going to be bearish, and we are looking for us to trade where we know the stops are going to be. And I think for a lot of people, when you first come into this business, and I'm sincerely hoping that most of the people watching this video are fairly new to trading. And the reason why I'm saying this is that you have just saved yourself a lot of man hours, time, and most likely money by stumbling across this video, because I'm going to save you a lot of trouble, right? Because again, it comes down to the context, the correct way to do things, and the understanding of the layout, the understanding of the board. You can't go to the battlefield not knowing the battle space, right? You can't go to the battlefield and not knowing where the high ground is versus the low ground. You have to have some tactical awareness about what's going on in your market, and it doesn't matter what asset you're trading. See, what you're going to learn here today is going to be something you can do and take across any asset that you trade. Not everyone, right, but most of the people making YouTube videos about trading are just looking to take your money, or they're just looking to, validate themselves, right? Extol themselves as, oh, I'm a millionaire trader, or I've done this and I made how much. It's all about numbers. And again, I understand this, right? Most people are attracted to trading because of money, right? Why else be here, right? There's no point. This whole business is about money. But you got to realize that even though it's about money, there's a process, right? There's a factual way to approach this, and people like to believe that you can just approach it anyhow, right? Everyone's got their own little edge, right? And that's crucial. Everyone needs their own little edge, their own little piece of information that gives them an edge over the other participants. But all of that said, most of these guys are not in the business of providing you with any kind of edge. They just want to be famous, right? That's the bottom line. If you're at this channel, as you can see, I'm a really small channel. I don't really have, no one comes here. Like, most of my videos get less than 200 views in some cases, right? But for the people who do, they walk away with a tremendous amount of value, and I want to keep it that way. because again, like I said, and for me, it's not terribly important that I get millions and millions of followers. It's not terribly important. Just to put it bluntly, I've had an interesting career in finance. I love talking about trading. I love talking about investments. I believe that if this is going to work for everyone, we need to be a community, right? It's a tough business, and I think we're at the age now where we should all be doing things to help each other. And if I can give you a little piece of information that's going to help you, then I'm hoping that you could take that same piece of information and you could then go to others and say, hey, this guy is really, really, really trying to help us out here. We should be watching him. We should be watching his videos. We should be trying to understand what he's doing. I have a free Discord server, right, where people can come into and you can see what I do. Not only do I do stuff around the FX space, so all of the CFD stuff, but I also sell options, right? Something I talk about extensively on my Discord server, and I'm very transparent with the option positions I'm in or what I'm trading per se, right? I'm primarily a put option seller, right? But I've had there's nothing I haven't traded, right? There's nothing I haven't seen in these markets. So if I'm sitting here today sharing that with you guys, I guarantee you a lot of people will not be doing that, right? What they're here, and trust me when I say what they're here to do is take your money, right? It's like what we like to describe as the sell side. So the sell side of this business just wants to take your money, and 90% of people are in the sell side of the business, right? They're not on the buy side. So the only net loser is going to be you. So if you want to get ahead, you want a community, you want to be able to be on a channel that is going to help you and tell you what the real deal is based on experience, and this is where you need to be, guys. Anyway, enough of that. Let's get into the video. So most of you are looking at my chart thinking, what the heck is this? Well, this is what we call a TPO chart. If you've never seen it, then you've probably never really got your teeth into the idea of professional trading, right? This is your first rodeo, and this is perfectly fine. So I'm going to show you what I see, and then I'm going to show you what you see, and then you're going to get a very good understanding of what market profile can do for you and how you can trade that with the same liquidity concepts that you probably have seen somewhere or heard someone say, even though in my opinion a lot of it is looked at incorrectly, right? It's being gamified in a way. It's just looked at wrong. It's totally okay. Everyone can do what they're doing, and if it brings you joy and it brings you wealth and it brings you success, then keep doing what you're doing, right? If you're struggling and it's not working for you and you're thinking, I've been at this for a long time, then you got to watch this video. Enough said. Right, so moving on, let's talk about what we're seeing here right now. So just to provide some context for those people who are probably here new, seeing this for the first time, I'm going to show you what you would normally see as a retail trader. And I'm not going to start with crude oil, actually. I'm just going to pop over and let me start with cable, right? Because I know that there are a lot of people who are going to be watching this, and they're going to be retail traders and they trade Forex, right? So I'm going to talk about this first, and then we'll talk about crude oil. And these are going to be examples, right, of what you should have been looking at yesterday from the previous video that I did, and what I told you guys to do, and what you should have been looking forward to. And like I said, if you haven't seen the video, just check it out. So a couple of things that you're going to stand out. So first and foremost, we know that, and we've said it time and time again, that under the 126 handle, there's going to be stops, right? Wherever there's stops, so if you've ever traded on a dome or depth of market, this is not special information, it's not a secret, is that people got to put limit orders in. Either you're going to put a limit order, you're going to put a stop order. So the actual order book, or the central order book in the futures market, is a collection of stop orders. You can't see market orders, right? If someone comes into the market and places a market order, you just can't see it. You don't know, it's instant, right? So someone could just turn up and, you know, slap 50, 60 contracts on the market, boom, right? If it's in crude oil, you know, you can see thousands of contracts drop at market, right? So not everything is going to be traded from a order point of view, limit order, stop order perspective, right? Passive order. So the passive orders in the book is what people are talking about liquidity, because the collection of the passive orders, whether they're stop orders or limit orders, provide liquidity for both market orders that are coming into the market for both market orders and anybody else who essentially wants to put a limit or a stop order anywhere. So those stop orders create liquidity for those who need they need to get into the market right now. That is the point of having an order book, is so you can see where people are asking to buy stuff and where people are essentially bidding to sell stuff. So you can see this, right? That's the point. And that is the only point of an order book. So all this liquidity stuff that you hear people talking about is just passive orders in the book. So the key here is not to understand what a liquidity grab is or a liquidity concept and all the smart terms that people like to use. What you need to understand is, how is the order book led? What's going on at each point in the order book? And bearing in mind, there are going to be places in the order book where you're going to see orders that are going to be pulled from the market. These orders will never get executed because some algorithm is busy just putting and pulling orders. If you've ever seen a dome, you know what I'm talking about. You can see this consistently happening through the day, right? There's spoofing going on a lot. Most of this stuff is illegal, right? But it still happens, right? People still going to do it. So if you know all of that, what you're trying to do is understand, okay, how do things work in essential order book? So you're looking at a 1 hour chart of cable right now. Primarily, I like to do a top-down affair, right? I'm not really an intraday trader anymore. Generally, you'll see me on what people like to call swing time frames. So, but for argument's sake, let's grind this down. So pull this up here. Right, ignore my chart for a second here, right? But what you're looking at here is a weekly chart of cable. Now, what did I say to guys? If you see my previous videos when I was talking about the pound, I literally, and it's part of my free mentorship, which is right here in YouTube. And what I've done is, when I was designing the course, I was mapping out the liquidity areas and how they happened over specific periods of time. So as a candlestick trader, this is what you're going to be looking at, right? So you can see here that there were going to be either sell stop orders here where there would be buyers, so that will be the corresponding, get out the trade, or they will be I should have said sell stop loss orders, and there will be sell stop orders as well. So a stop loss order is to get you out of the market, so people who are long here are going to have their stop orders here, and people who are looking for breakouts are going to have their sell stop orders in that location. Now, why is that? Again, I'm going to explain this again, right? I've explained this before like a million times, but I'm going to keep saying it so it makes sense and people can actually remember this. So why would anyone put an order in a place, right, where they know that the market's likely going to go against them? Well, it's rather simple. Now, let me break open this chart. A lot of you said to me at points that, hey, we're on a mobile phone, so we can't really see anything. So please make this stuff bigger. But don't worry. When I edit out the video, I'll make sure I can zoom in and show you all the key important areas. So let's put this into context. So right here, you can see where we pushed below that line, right? So let's say that you were a trader right here and you decided to get long as we were dipping. Now, more than likely, you are going to put a stop order. So let's say you were a buyer, say roughly about 114 as it was going under, you thought this was it. You're going to put a stop order not too far from that level that you entered. So there's going to be a cluster of stop losses around here, and all of those stop losses are going to be sell stop loss orders, right? It's an order to stop your loss and sell to whoever wants it at that point in time. So it doesn't take a genius for you to work out, actually, this is the reason why a lot of people would want to be buyers here, right? Especially professional money that can afford to absorb these stops in large amounts so they can make a ton of money. They're going to wait here. So why can't you do the same?
What was the reason? I had a reason. What was the reason? What was the reason? I just explained the reason. What was the reason, bitch?
That's all it is, right? It's just understanding what's going to happen. Now, let's say that you were right? You bought and you really got in at the best possible price. You're also going to put a stop order, most likely at 103. So that's going to be your sell stop loss order, where you decide where you're wrong, even though you're in a long position that is likely to turn out profitable, but you don't know that. So you have to protect yourself. So it's that protection mechanism that keeps happening at these levels is why we get an overabundance of liquidity, and it can always be taken advantage of. So now if you're looking at a chart in the future like this, and you're thinking, okay, where are there going to be an overabundance of sellers? Well, likely if you're going to be have buy stop orders here, then that's just an order to essentially buy into the market, and they're going to have to buy from someone who is willing to sell, right? So that's going to create that liquidity on the sell side of the book, right? And again, this is not like rocket science. It's just how it is, right? If you think about it from a first principles point of view, then you're going to quickly realize that, well, the market has no other way but to function in this way, right? So this is going to save you time, right? So rather than looking at maybe a million different strategies, you can focus on that step one, which is, okay, where the buy stop's going to be, where the sell stop's going to be. Call it what you want, sell side liquidity, buy side liquidity, whatever you like to call it, doesn't matter, as long as you know where the stops are going to be. Now, if we think about it, we can see that once we got up there on the weekly frame, we took out all those buy stops up there, we retreated. Why? Because those were the most stops were up there, and it made sense for the people to sell to those stops. That's all that's going on. So all the people who are now deciding their buy stops are being triggered, or their buy stop losses are being triggered, it's going to join sellers, right? And then it trades lower. We didn't quite trade under to take out the liquidity within sort of the mid frame, because there will definitely be stops here. We kind of bounced and we traded upwards. That is one of the reasons why we don't chase. But on a longer time frame, we can see that if the market trades above 132 and we get like this huge rush of sellers and we cut back in, that could potentially be a selling opportunity to the downside. Now, you're not always going to be right, and do you know why? Is because you could hit that sell side liquidity retreat and then draw in more buyers, and then the order flow continues upwards, right? And that's just down to algorithmic behavior. We don't know if the algorithms are going to attempt to offer higher prices to new liquidity levels like 137.90, maybe back to 142. These are all areas of liquidity. Now we can overlay this. I talk a lot about macro. So if this is a macro picture, we can think about this on a macro level, that, okay, if we break the high, then there's a chance we're going to trade to some kind of macro level resistance. So you can tend to want to project based on historical price moves that, okay, maybe over a certain given period of time, we get a certain percentage growth, right, in this asset. So all things being equal, we should see that on the upside swing. It just gives you ideas of potential target areas. But the one thing we can be certain of is the market will trade and chase these liquidity areas at some time in the future, since we can clearly see that we only have two left within a medium-term time frame. So the low of 118, which of us here think that the pound's going to go to 118? It might do, but that can only occur in a major event, so a major devaluation event. So we also have to look at the geo macro, right? What's going to happen in the future that would cause the British pound to collapse to those levels, which will be a major easing event. And that's essentially going to mean that it's going to have the impact on people who live in the United Kingdom. That's everyone, myself. We're all going to pay some kind of price. That is a trade you don't want to take unless you've got reasonable evidence to say that's a trade you want to take, right? So again, if we break to the upside, we're looking for a liquidity wash to the downside, then we go into the intraday now. So we probably want to trade that on a short-term window if that's how we swing, right? If we wanted to trade it on a swing level, you can drop down to a daily time frame, for example, and then you can trade it on a daily time frame. Most people, I bet a lot of people watching this video are going to want to trade it on a shorter time frame. And that's what brings us to this time frame. So if we know that the real advantage for sellers is the market going up, then my question to you is, are you going to want to be long or trade this level? The simple answer is no, right? It's just to save time.
No.
So that's the first thing. We need to be conscious of liquidity. So where does your sell side opportunity come next? Well, that's when the market trades above 127.86, right? That's what best case scenario is, above 27.65 with a retreat. Do I want to short the market here? Well, there's short-term liquidity sitting above here, which is this reaction. That brings us to the other point, which is time. So let's talk about time. There's always a specific time that you want to get into the market. So as you can see, I've done a bit of a break before continuing this segment. So if you can, during the time I wasn't in front of the screen, you can see that obviously just having the same conversation about this is a liquidity area. So we're getting to pull back now. And more than likely, because of the time, it's 1 p.m. New York Open. So we're seeing a little bit more liquidity, and that's reflected in here. But again, the other concept, before we even talk about time, I should have gone Connie first, is volume. This is FX. So we're looking primarily at tick volume, right? But if you look at the volume that was trading in Europe at 8 a.m. London time, which is the London Open, it was much higher than what traded on the New York Open. And that simply tells you there's just not enough demand right now to push this market up past the high of the London Open. Now, if that was to happen, right, so let's say the Nasdaq opens in about 26 minutes. So if the Nasdaq was to open and we were to sort of start breaking and taking out the London high, what are we going to get? This is a liquidity area. So we're going to run all the stops up there. My feeling would be, because there's a lower volume, we're just going to continue. So we're just going to blast all the stops. Those buy stops are going to trigger, but no one is going to want to risk being in a short position when the biggest volume of the day has just been taken out, because that would have had to have come from a US session. It wouldn't even make sense. You know, how come they would be selling so close to each other, right? You know, it wouldn't make sense, right? It's just not going to add up. So for me, I would focus a lot more on what's going to happen in the Nasdaq. There is a higher chance that we're going to drive much lower and then either suck in demand before the liquidity area, which will be confirmation that this area is held, right? And then we just get additional demand, and that will be reflected in the volume. So it goes back to my earlier point. It's not just about liquidity, right? We're going to trade a liquidity area at some point. It's also about understanding the timing and how that all relates to the velocity, right? The volume that's taking place, right? And that's crucial, right? These are the things that we need to think about when we look at these things. So very, very, very briefly, now that you guys are up to speed, right, let's show you what I look at, right? So we're technically looking at the same thing when we look at a profile chart, but I've got a bit more information. So here I can see there is what I like to call a bid stack, right? Because I'm looking at the condensed profile. I can see where liquidity is traded before. I know this is a strong area. It's a strong area again, and we're now trading back down. So this was the liquidity area we were viewing here, right? So we can see, right, it's the same thing we're seeing. So this was the liquidity area. So if we go back, that's the one we were viewing here, right? So this is that condensing, right? We can see that better on a profile chart, and we can see that liquidity traded up, right? And we can see us revisit that. So this becomes under 25.95. They're going to be stops, so that's going to be the new liquidity area. And it doesn't matter if we take in demand here, that's perfectly fine. As long as we can see that validated by the volume, then it's a tradable opportunity. However, if you want the best tradable opportunity, you want the optimal plays, then you want to focus on where we take out the stops and get that confirmation. So again, if we go back to what I'm seeing, I can see that this is a strong area for bids. It's been tested. Right now, if I want to get some, there's no other reference. That's the only reference I have within the time frames. Right, you can see my profile charts ends. I can load more profiles, but that just slows down my system, so I'm not going to do that. So now I'm looking at this in real time, and I can clearly see that okay, we're going down. I period is the liquidity area, but I've got some additional information. If we're going to see any demand, then I know it's going to come at the value low. Right, so this bar here, that's value low, value high. So we should start seeing demand about 26.12. Right. Now, if we don't see that demand, excuse me, if we don't see that demand at 26.12, then we can expect the I period liquidity area is going to get taken out. And then we wait for it to get taken out, and then we wait for a return. So we're not trading in these useless areas, right? These ones, right? This is the 1 p.m. We spoke about that. New York Open, 1 p.m. for me here in London. We are not trading these areas. That's what we're looking for, right? This is in fact, when you look at the dynamic profile, so let's just condense this. I mean, this is mid value, right? We're in a value area and we're mid value. This is the fairest possible price. No one should be entering the market at this level at this time. So what does that tell you? We have to wait for the Nasdaq Open. Well guys, till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?